morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, December 20th. Hi, market's really gyrating in a range, in a real tight range yesterday. Despite of all what is going on overseas, the Russian ambassador to Turkey had gotten assassinated by a Turkish assassin. Nobody cares. Russia actually called it a terroristic act. They're part of NATO, Turkey, so I just don't understand what's going on. It's just crazy out there about the complacency levels, which we like to continue to check. I mean, it's just, if I was a long-term investor, which I'm not, I would tell everybody to be careful and use caution out there. I mean, we have rising interest rates. We have bonds getting smashed. We have equities at all-time highs, fully valued, and markets continue to go higher with no pullback. Now, if we had a general pullback, we pull back, we consolidate, then we go higher, but we pull back. I mean, you're talking about a 14, actually almost 20 full days of trading, which was all of the gains are made in 20 days for a year, right? So we had a year's worth of gains in 20 days. To me, that's just crazy, and people continue to buy it, and I see extreme complacency. I see everybody talking about buying stocks. When I see that, and I see the papers, Dow 20,000, and everyone talking to go buy stocks, I'm the contrarian to say I want to be careful. I want to use caution. I'm looking to hold anything, which generally I don't, and a lot of people don't as well that subscribe to the videos. But there are a lot of longer-term investors which do follow the videos, and I just want to make sure to make that point. To be protected, buy a little hedge, buy some puts. It's very cheap when we have volatility at almost at all-time lows. And we have the VIX at 11 handle. I mean, that's just crazy. And, put call ratio still reading very, very bullish. Okay, and it's something that you have to be concerned about. I mean, it's just something that you don't want to just close your eyes and continually buy stocks. I mean, last year, same time this year, what did we have? We had a rising interest rates that rose quite quickly, like we have now, and markets started to sell off the last couple of days of the year, right? Right after that, you get a couple of days of tax selling, and markets sold off, and what happens? Bam, the market started to really sell off in January of 2016 for 8-9 days, just about 14-15%. And then it recovered, but at one point, you're not going to get that recovery that everybody thinks by the dip, like it happened in the Brexit vote, Trump, the election. Yeah, you just got to be careful. It's something out there, and I am not a doom and gloom type of person. I trade what we see right off the charts, whatever the charts are telling me is that. But when we get to these extremes, and every asset class is basically at extremes, at one point that rubber band's going to snap back, and I just want to make that point to you guys. Okay, so just be careful out there. Here's the VIX. Okay, I wanted to show that to you today. I want to look at some volatility, and we have VIX with the Bollinger Bands really starting to point. Now, we haven't broken out of the band yet, but we're going to get probably one more flush that will close outside that band. When we close back in the band, that's going to be a buy signal for volatility for the VIX. It's going to be a sell signal for the market. We're not there yet, but we are very, very close. And when we see an 11 handle in the VIX, to me, I would be extremely cautious. Okay, next is going to be one of my favorites, part of our TMT trading model, and is the NYUD with volume. And you can see here clearly have negative divergence, right? Market moving up. We had the first push up, and I showed this to you before. We had some really nice recovery off of the negative 200. That's fine, right? We had a nice big move up. But the second push up, we're not even close. We're actually rolling back over again. And there's many of what I'm showing you now in our TMT trading model that says that you have to use caution, okay? Once we were on a sell signal, and we reverted back up, all of our indicators in our model turned back neutral to positive, so that sell signal was abated, and now we're back into a neutral state, which we will long to a neutral state, and now we're back, not in a sell signal yet, but we're getting very close right now. So again, just a word of caution, the breadth of the market, the internals are not really reading what the price is telling us, and price does pay us, but you do need some support here behind price. Here's the dollar, and another reason why is the dollar rallying, guys? The dollar's rallying because this is going to be the ultimate safe haven trade. Is they put the large institutions, money managers, and accredited investors, they start buying the buck, right? To park their money somewhere. And if this was not, let's call it a fake move, we would have reverted all the way back down here, if not move lower to the 200. we haven't even filled this gap yet. All right, there's some gaps down here, and there's also another gap, and we moved higher again yesterday. So it's just something of a word of caution. And we're going into 2017. If this buck continues to go higher, what's going to happen to the multinationals? Well, they're not going to make money because they're going to have currency headwinds. So you have to be real careful again. All right, next is going to be GDX, and we talked about GDX here. I'm really liking gold, but I think gold goes down one more time, one big flush right back down into the early 2016 highs in GDX, probably right around about 15 and a half, 15 bucks. Okay, one more flush I think we get. We are in the basement with all of these indicators, which is good. So we're at washout levels. Now we just need to see some curling back up and turning positive here. Okay, so right now that's what I'm watching closely. I wouldn't touch GDX right now or GLD at the moment. Okay, this is off of our TMT Pro Trader Premier video. Keep an eye on the 106 and change right now. I think we get to 103. I think we could definitely do that. So just be careful out there. If you're looking to buy GLD, I think if you buy it now, you're kind of catching a falling knife. I think we can get a little bit lower and then start nibbling in. If that's the type of trader you are, you got to follow your trading plan. Here's the spiders. You can see here we're back into that big bearish rising wedge. 217, 219 really is going to be the first target. Then the 217 area will be the next target in the spiders. And you can see here we're starting to roll over on our indicators. Very, very light volume. It is to be expected because we have a holiday week, but I want to show you a pattern that I found on a 60-minute chart. Nice, beautiful, well-defined head and shoulders pattern, which measures down to 220, which that would be more than likely would if it got down to 220 hard, I think we'd fill the gap here. Okay, and then we have another gap just below that, right around 219. So anywhere from 219 to 220 really would be the target. You could see if we get another little pop back up, that'll make that we're defining that right shoulder real nicely. So that 220.75 falls into play here. And I really think that this is a nice little pattern. Why? Because nobody's talking about it. One thing I like to point out to our TMT subscribers and students, when the pattern is talked about by the pundits all over the map, if you had Bloomberg, you had CNBC, and you had all of these commentators talking about a head and shoulders pattern, more than likely it will not happen. All right, perfect example. There was a head and shoulders pattern on a daily chart last year, and I believe one of the pundits of CNBC was talking about it, and then somebody else picked it up, and then it never happens. Nobody's talking about a 60-minute head and shoulders, so keep an eye on it. The big neckline is going to be the 224.57. That's going to be the key. You break that, that's where we start to go. And if you don't know how to trade a head and shoulders pattern real quickly, if you break down, right, you could take that on a quick break, but you take that as a scalp trade, and then you wait for the back test of the neckline, and then that's going to be your cue to get short after the break of the bear flag into the neckline. All right, that's how usually you trade a 60-minute or any head and shoulders pattern for that matter. IWM, you can see here the IWM negative divergence as prices continue to hold up. And another thing why I can talk about extremes is the follow the commitment of trader reports. It's free. It's online. You can Google it. It's amazing because we have all of the smart money, which are the producers report. The producers are now buying the bonds. Okay, they are long bonds while everybody is short bonds. We have the smart money long volatility where the speculators are short volatility. Okay, and we have the IWM, where the commitment trade reports are the most shorted ever since the index has been created. That's producers. That's the smart money. So it's not a timing tool, but you have to put credence into that kind of information. Okay, let me show you the volatility index for the Russell, and you can see here that we did close outside the band on the thumbnail, and now we're looking for an inside print. If we close inside today, that'll put a sell signal into the Russell. Okay, so just keep that in mind when you're trading today. Next and last is going to be your daily cues. We're holding above the line here, and it looks like a small little bull flag here. Let me just draw that for you guys. So use caution as we're going in. We are coming into a holiday week. You know, as me, for those of you who follow me, I'm looking for a holiday reversal. So I'm looking for a little selling going into the end of the week. And if that does not happen, expect some selling going into next week. There will be some tax selling, and it's actually pretty amazing that there's no tax selling. We haven't really seen any tax selling at all. And yes, I understand the tax rate is going to change, and why sell your stock now, your loss now, when you can defer it into next year. I get it, but I just want to, there's still lots of gains. Some people have lots of gains that they need to offset, so I just don't understand. It doesn't make any sense as far as a tax strategy. But either way, bull flag here in the Qs. Let's see if we break out of the flag today. Keep an eye on those FANG stocks too: Apple, Google, Netflix. CMG's looking really nice. I do like CMG. Over the weekend, we had Ackerman looking to buy, not buy, excuse me, take over 4 seats on its board. That's a good positive. A lot of shorts in CMG. I'm looking at that for possible pullback, and then see if we can fuel some more upside in CMG. All right, guys, have a great day, and we will talk to you later.